Okay, hi everybody. So we are starting our training. I want to make sure that people on the Discord channel know. Just give me a second. Okay. So welcome everybody. So this is mostly a training for the people in the Discord group. If you look under Patreon, the group is, you can find it under scale invariant. It's one big word, scale invariant. But also we'll post links on the YouTube channel in the comments. In fact, I can do it here. You can look at the chat. I will give you a link in a second. You can also go to my to our main website that is called bitposeidon.com, and there is it's probably the best place where to start because here I just posted in the chat and I can show you. Okay. If you go to bitposeidon.com, then there is a tag and you can find the indicators link there. Just to give you an idea, it's the Patreon subscription. There are different levels, but really the one I suggest you because it's such a good deal is the Insider, and it's only $20. And mostly they did it symbolically. And right now we actually have a 40% discount. We keep the discount going probably for a month until Christmas, so you can gift it or maybe gift it to yourself. You can go with the annual subscription that is 40%. So it's basically nothing. And I made a pledge with everybody where I'm producing more and more indicators. Right now we have 9, including MicroStrategy model. And soon we are also having a little bot that is going to do futures trading, where you buy a little bit of with whatever leverage you like, maybe 2 pair or 3 pair, something reasonable where it's almost impossible you get liquidated, and you can make a few $100s every few days. It depends on how much you want to invest. But during a bull, it's a pretty good idea. We can discuss some of these ideas on how to be a little bit more aggressive without doing anything crazy and degen, but you can still take advantage and be a little bit more active instead of just looking, and watching what is going on. You can be a little bit more aggressive without taking crazy risks. Anyway, let's go. And the deal that I made with the people in the community is that no matter how many indicators I'm going to make, like 15, 20, and we are looking at different things, different angles, coming up with different ways of understanding Bitcoin. We can do also some indicators about the miners. Right now we have one about MicroStrategy. It will be always the same price. I'm not going to add that, it's not that you're paying for, it's like a MicroStrategy, it's getting us more and more Bitcoin, but at least the price of the stock goes up, right? In this case, it stays the same, unless there is some crazy inflation or whatever, and we need to adjust it a little bit. But it's an mutual exchange. You help me to with my project. I can hire developers. I can help my son with his videos because he's trying to do this full time, and I'm giving you a service that hopefully is useful to you. So it's not about trying to make a ton of money, just enough to pay for the expenses and keep this thing going. It's right now it's my full-time job doing this. Okay, and the community is very nice. I can show you a little bit around. in a moment after we talk about indicators. We have many channels. We have a channel that we call it kind of like a ghetto, where people go and talk about other coins. I don't think we made a MicroStrategy channel, just recently, where we talk about options or MicroStrategy and other things we can do. We have like I say, a alt channel, a shitcoin channel, where we don't kick them out. People that are interested in that, because we are open to everybody, but we tell them keep the discussion there, because we don't want to have in the general channel people talking about silly coins, whatever. So it is a channel where you can discuss it, but mostly it's about Bitcoin, and the different cycles, whether we are in the cycle, what we can do, the different approaches that people have. And there is no dogma, absolutely. Like some people say I'm dogmatic, I'm trying to present just one picture of Bitcoin. There is no that attitude. It's just everybody brings their own knowledge, their own understanding. Some people modify the indicators and share their modifications in terms of aesthetics, looks, but also other indicators that they go well with what we do. We also have coding classes usually on Friday, where we're looking at Python or maybe PineScript, that is the algorithm behind TradingView, and we learn together. I was happy one time. He's one of my favorite people there. He's a chef in Netherlands, and he quits his job. It is very hard, and he comes from a job. It's in Europe. I am in United States, and we do coding together. It is amazing. Like very motivated person. So there are a lot of good Bitcoiners. We are right now close to 1,000 people in total. So join us if you think that there is something useful in this. Okay, and take advantage of a 40% discount. Anyway, so let's go. Ciao, Giorgio. Giorgio is saying, buonasera, professore. Ciao. Okay, let's look at the indicators. Okay, let's go and dive in the indicator. I will give you a tour of a server at the end, and also I can take questions, and you can interact with me at any time, asking me questions, etc. Okay. If I go a little bit too long talking, be patient, because I'm trying to focus on what I'm discussing, but then I will come back to your questions. All right. So we have at this point 9 indicators. The main one that everybody gets, because there is even a $5 option, and with the discount, it's going to be even less. So basically, almost free. So everybody gets this indicator for very, very almost nothing, right? Symbolic payment. So what this indicator is, and it's nice to. So first of all, for the people that don't know anything, you need to use TradingView. We are using a TradingView. But I'm developing a separate project where we're also working on charts that you don't need TradingView to look at, but because some people don't like TradingView or whatever. But I think TradingView, it's amazing because it has a lot of perks. You can look at other things like stocks, look at MicroStrategy. It's a very ideal thing. But some people don't like it, so we're also working on that. But it's going to be a separate project, and when it's ready, I will announce it. So these are right now we work with TradingView. So basically, you need to get you can also do it to use the free version of TradingView, but it's better to have a paid one, because the paid one allows you to see multiple tabs like this, and you can stack them and compare them, right? With the free version, you can do it only with 2 indicators. You can still do it, but you will have to have different pages, It depends on you. Right now we have a 75% discount. I don't know how long it's going to last. So actually, it's pretty good. You could get TradingView for 70% discount. Okay. So what do? You start with choosing and we have videos where we tell you how to set up everything. So I'm not going to spend too much about setting up. We probably need a good video. Saving Face, that is one of the moderators, he actually made a nice video about TradingView, like the basics. He knows more than me. Unfortunately, he's not with us today because I would have invited him as a guest because he has a lot of knowledge. But he's one of the resources in the Discord channel. He's amazing. He's always there helping everybody out. But yeah, he made a video, and there is a channel where we have like hundreds of, I don't know if it is hundreds, but dozens and dozens of videos of previous sessions. So you can find all of this material in one of the channels in the server. It's called live recording session, something like that. And he has a video there. But I'm sure there are also videos about how to use TradingView online that you can find. So what we use usually, it's this all-time history index here. See, this is what we use because we want the entire history of Bitcoin. And if you were doing trading on a particular exchange, probably you wanted to have like futures instead of having spot. Probably you want to have that exchange, a particular exchange. This one is kind of an average between all the different exchanges. But for our purpose, is actually perfect. This is what we want. And we want the entire history of Bitcoin. So if you see, the history goes all the way back to when Bitcoin was created, so it's really good. You want to use that one. So you select that. I like this dark mode because the colors of our some of our indicators are white, so they come up easily. But you can choose whatever color. And again, different people in the Discord have different setups that you can follow, and they look amazing. Like Saving Face did an incredible job where some of these indicators look even nicer than what they look here. So that is one of the resources. Everybody is helping each other and sharing things. It's really cool. Even sometimes even scripts for PineView. Anyway, so these are in particular indicator. It's what we call the adaptive power law indicator. So what does it do? So usually when people calculate the power law, they choose a particular date, they fit the entire data set, and they get parameters, right? Like the slope, the y-intercept. It's kind of fine because even if there are small variations on the value that you get for the slope of the y-intercept, it's okay because they tend to an average value. Like if you did it at different places, let's say you did it here, then you did it here, you did it here, so you did this regression analysis, right, at different places, you will get slightly different value. Like if you do it close to the top, the slope will tend to be a little bit higher. If you do it close to the bottom, it will be a little bit lower. The beautiful thing about this that gives us confidence that this understanding of the power law is correct is that if you can do it even offline, right? You can add more and more data and do this calculation. And people either have done it, other people who study the power law have done it. You can show that the slope tends to an average value. And that means that it's becoming more stable, right? And that probably that average value is the true value. But it's okay. It's okay if you choose, again, because we want to understand basically where we are in the cycle. It's not like the exact value in dollars of a trend line. It's, are we above a trend line? Are we below a trend line, right? Are we in a region where we have a bull run? Are we in a region where we are closer to the support? Or the power law behavior. So that is the goal. But this approach does exactly what I just described. It calculates the power law at every single point, and then it tries to basically fit the data with these continuously changing power law. This is why it looks a little bit wiggly, right? Because it's going to be influenced by the data as it comes in. There are reasons why we're doing that. The first one, it's, let's say, pedagogical, because we want to show, look, doing that will change slightly the power law, but not much, right? You see, still pretty much the same thing with a little bit of wiggliness because of the influence of the local data. Of course, if you go more back in time, given that there is not much history, the new data can influence a lot, right? So the wiggliness becomes much bigger. But even if you go all the way, to 2010, when we start to get consistent data, it's still pretty consistent, you can see, right? The beauty of doing it in this way is that, you kind of you make kind of like local power laws. And it's cool because many times, right, because the idea is if a power law is correct, Bitcoin needs to spend a lot of time doing power law things. It needs to follow locally the power law. And this is exactly what happens, right? So this, by the way, the general power law is the thick blue line. And these are deviations in both directions. For reddish is more red the color is, bigger the deviation is in both directions. So by the time you arrive to the purple, this is where we have what we call the support line. Basically, tends to be historically 60% from the trend. And we almost never go below that historically. Even during COVID, right? For example, this was COVID. We reach that range and then we bounce back. But it's pretty amazing. And so you can use it as a kind of a worst case scenario. It's one of the good things about the power law. It gives you always a feeling of where we are. And is it possible that we can go below? Yes, but we never did it for 15 years. And we believe there are real physical reasons. We have posted a lot. If you study the power law, I'm writing an entire book that you can use as a reference, and I will also have a website. I wrote a bunch of articles, everything I go deep and try to explore. I try to write an article to summarize the funding, but it's in Medium mostly. These articles are in Medium. Are also trying to post them in the Bit Poseidon place where basically there are different explanations of the power law, all the different findings. I need to catch up with the Bit Poseidon. I am a little bit behind, but eventually will be a place where you find all this understanding, right? And one of the core understanding, we think that the support line here, it's due to the cost of production of Bitcoin. So there is a reason. It's not just, because it did it in the past. No, because there are theoretical reasons why we think we cannot go below that. That if we go below that, the miners, usually the miners do not influence the price because of the volume is too high and in comparison with how much Bitcoin they produce. But here, there is an exception at the bottom, because at the bottom, nobody wants to sell. Everybody's exhausted. There is nothing to sell. It's not that, okay, we are running out of Bitcoin or whatever, but people are exhausted, right? They started to, all the weekends disappeared. The stronger holders do not want to sell at this price. It's mostly the people that are desperate, that are scared, the newcomers. They don't understand the cycles. So, the people who want just to speculate. And the only one that could sell are the miners, because, that is their job. Basically, they want to mine and sell the Bitcoins. Sometimes they keep some of them, right? And for long term, but they have to pay bills, etc. But many of these miners decide to keep the coins because, and maybe I talk with a lot of miners, with because sometimes they consult with me. I'm also involved in a possible large mining project in Italy, and so I'm trying to catch up and trying to understand mining. And they tell me, like sometimes we even take loans against our machines or whatever, and we don't sell. And so this creates kind of a wall where nobody sells, and so the price can only correct up, right? So there are very theoretical reasons. Everything I do here is not just based, oh, let's draw a nice line, etc. I'm trying to really go deep in the physics of Bitcoin. That is a consistent team, right? We are trying to use science. We're trying to understand the system. We are trying to understand all the different components, how they work with each other. This is our particular approach, but I think it's unique. I don't think anybody else has this approach in the entire Bitcoin community, okay? Some people started to join in this understanding, but it's mostly because I influence them in a way or another. All these other influencers like Sina or Plan C, etc. They are all, in a certain sense, in the Giovanni school of thought, right? In the power law school of thought. We don't agree on everything, but that is the idea. Anyway, you can find these many different ways, but the simplest possible way is about 60%. And I have called these bottoms in real time several times, over the years. So this is the bottom, and these are deviations, right? Equal deviations in percentage, and notice what happened, right? The price follows these local power laws. That is one of the cool things about this particular version of our indicator. They follow locally the power law. They seem to have this behavior. They follow the power law locally. When there is a change, they jump, and sometimes they go to the next line. They see there is another support region here where the power law follows this maroon type of color. When there is a dip, so you can actually use it to identify dips and maybe buy more, like you can put some alert. And one day we can learn how to do this, but I want to show you how to put alert to let you know, if a price ever goes below, right? You see it going sometimes for months, right? Here was January 17, 2023. It stayed there for almost more than a month. Then there was a dip, so you could put an alert to say, hey, if ever we go below this, let me know. And then look what happened. This became actually resistance. This orange line, right? Left and stay there. It couldn't go across, maybe just temporarily. And then it corrected itself and it went there, right? And here now this was again a support resistance. And these are now the resistance and support that TA people talk about, that I never liked them because they seem always arbitrary. These are mathematically calculated. It's not a human drawing these lines. It's based on the math. And it seems the math seems to work, right? And so you can use these to kind of understand what is going on with the price, what is the next move. Here it seems that it was something exciting. What was that exciting thing? Well, it was the ETFs. This when people started to hear about the ETF. We were not approved yet, but there was a lot of anticipation. The price started to go up, and now it still continued to follow. Sometime here, this became a support line. So it's very interesting. And then this line became close to the power law, became a resistance. And then the price corrected itself, right? It reached this. Now we are going up because the bull run started, okay? And now it seems kind of, the power law is about 97,000, so we went above, but it's kind of going around there, almost like if it was some kind of resistance, right? The real resistance is actually 100,000 because people. This is one of the silly thing about human beings. We like round numbers, and like it's a magical thing. But it's silly. It's silly. There is nothing really special about 100,000 besides us saying that is special. That is silly. But even from a mathematical point of view, that power law crossing But we flirted with that, right? We crossed it when we went down, we crossed it. Seems to be some kind of resistance now that we need to cross, and there will be a milestone. So when we cross it in a very convincing way, will be a milestone that confirms that we are in a bull. And we should be in the bull because this behavior is exponential, and it coincides with what we think the different cycles are, right? Because until we have evidence that the cycles are not respected, we stay with the cycles. That is our philosophy, because it's the most rational thing to do. Why should we abandon the cycle simply because we have beliefs, right? Most of the people say, oh, well, because of this, because of Trump. Yeah. These are just opinions, but where is the fact? Where is the information? Where is the data? There is no data showing that if anything is different. The only thing that is different that we're going to discuss in a moment is the lack of liquidity, that actually, if anything, should make you a little bit, nothing to worry, but a little bit more cautious, let's say. Okay, so, and then what we do, we have what is called the full model. So the full model is this white line. And probably are familiar with my work. The triangle, by the way, these are halvings. Where the halvings are by the triangle. But the full model is trying to do, it has, different components. It's like when in physics we start to study something, like how an object falls, we always say to our students, let's exclude the effect of air, right? And that is okay when you're dropping an object with a big mass and you're close to the ground. A first approximation, you can exclude the air resistance. But then, as you want to understand better, let's say projectile motion, for example, you want to understand the path of a cannonball, right? You will miss the target if you don't include air resistance, if you don't include wind, if you don't include all the different complications. So same thing with Bitcoin. In one end, the power law says there are no bubbles, because basically what happens is we leave a power law trend, in particular the support line, when we reach a top, and then we go back to the trend, right? It's almost like the bubble cancel each other. But they are there. They are part of the history of Bitcoin. They can be used if you want to lock some of the gains, maybe. Today, this is one of the things we discuss in the Discord group. What are the different things we can do? Not necessarily sell your Bitcoin, that is an option, like sell a small quantity of your Bitcoin. And then, like the other day, I was listening Benjamin Cohen discussing these with other people, in a video that we were making, and he was saying, I always sell every cycle. That is the right thing to do, in my opinion. And then there were people in the comments say, selling for what? What do you think? For other Bitcoins? I mean, of course, you can do whatever you want, but if you're a maxi and you're looking at the long path of Bitcoin, what do you think you want to do if you sell? You want to buy Bitcoin here, right? You want to keep that USDT. You have to have this discipline now to buy anything else. You want to rebuy here. You don't have to rebuy here. You can rebuy here, right? You will get a better deal than if you just look at this passively. Now, it's a controversial topic. Some people don't believe that the cycle will continue. So, do it in a rational way. Don't sell everything. Just sell a little bit. It's always a bet, right? Because it's also a loss if a price goes down, right? You're losing in both ways. Like you say, oh, but what if a price goes up? But what if it goes down? You lose both ways. People don't think you lose because they say one Bitcoin is one Bitcoin. It's not true. Here, you don't own just Bitcoin. You own a lot of FOMO. Okay, so you want to sell the FOMO. This is what you're doing. You're selling the FOMO, and you're reconverting it in Bitcoin. Maybe I should start to use this terminology so people understand what I'm talking about. When you are here and you have 10 Bitcoins, you have 10 Bitcoin plus a bunch of FOMO, right? So you're selling the FOMO, that is the additional value of your Bitcoin, because they are valued $60,000 when the market doesn't agree, because otherwise, if the market did agree that Bitcoin was worth at this point $65,000, it will not crash. It crashes because it doesn't agree. Okay, the power law says, the central power law, the central line says, at that time, it said 38,000. That would have been a more fair value. In fact, they respond because he wants to correct so badly that he wants to bring it back not to the middle ground, but he wants to bring it back to the support. This is what happens. Okay. Now we'll continue, discontinue. In our philosophy, in our understanding, you don't have to abide to it, you don't have to accept it, but in our understanding, yes, it will. The same thing will happen when we reach the top and we go back to the bottom that is supposed to be in the 70s, 75, something like that. That is what we think is going to happen, not because it's a religion, not because we are dogmatic, but right now, unless we have evidence of something else, and then we need to change our understanding, it's what Bitcoin has done over and over again. So there is no reason to change the picture until we have new information. Right now, the most cautious thing that you can do is to stick with this understanding, because it's a more realistic understanding, right? And at the same time, this is my analogy that I always say, it's like, think about this like GPS. The GPS tells you, oh, it's time to turn right. You always use your eyes, right? You don't simply turn right and there is a building that made an error and you slam against the building. You keep your eyes open, and we will continue to monitor and see what is going on and see if all the signs align, and it looks really that there is a bot, that there is a correction, strong correction, and then we will take our actions, right? We are not going, like some critics of a power law that don't understand what we're saying, and they are saying stupid things like, Plan B was saying, oh, these guys, when the price reaches 200,000, they will automatically sell. Nobody ever say that. I never say that. I never say when we reach a particular price, we sell. No, this is why we have 9 indicators. We want to look at everything, how everything aligns, right? This is why we do it as a group instead of doing it by ourselves. We're going to be very, very aware of everything that happens. And these are just tools to help us in that. Anyway, so the full model tries to keep all this, it's like this projectile motion where we include air friction, wind, everything, right? So we want to include the fact that there are these periodic bubbles. This is what the full model does. It's a very simple thing. Physicists like simple things. I know that to many people, physics looks complicated, but it's the opposite. We like simple thing. We try to simplify everything to the simplest possible recipe, right? Like if you go to modern physics, we say, hey, look, there are 4 fundamental forces. There are 2 families of particles, with 6 subgroups. We are trying to come up with the simplest possible explanation for everything, right? We like that. And so this is why I don't do fancy things, like fancy. This is as fancy as I go in terms of colors. I try to make it as simple as possible. There is some kind of periodicity, so we are trying to do it like if it was a kind of a wave, and that periodicity seems to be sticking at 4 years. I know some people say, well, maybe this one was the previous top. For example, this guy Leo, I like Leo. He's great. He has an interesting model. It is possible. It was possible that there is something else that this was the peak, and my idea is that this is the peak because it seems to be aligned with all the other peaks. This was an early peak. We were too excited because we had a lot of liquidity due to COVID. There were a lot of stimulus checks. People push the price. We had an early peak, but then we had another peak here. Okay, so but we are open to other interpretation, but there is a very precise periodicity that we follow that is 4 years. This peak seems to be all aligned, and this is what we do. And then the full model also contains the bottom, right, that I describe. So it's trying to follow the bottom. So you see, this is where the other peak is supposed to be, and it has also what is observed over time, that these peaks are becoming smaller and smaller, right? Now, this is the weakest component of a model because we don't know if this is going to continue to happen. It's another weird thing about Bitcoin that is super regular, also in the decay of the peaks. But we don't know. We are not sure 100% that it continues. But you know what? Is one of the few things that we can use to actually make a prediction that is mathematically based, because everything else will be just I would like to see another prediction of a top that is based on math beside feelings, because the people that tell us, okay, beside plan B, but you know what I'm thinking about plan B, that is basically garbage. It's a fake model. It cannot predict anything. It has like mathematical errors, so it cannot predict anything. But beside that, there is nobody else who say, oh, we are going to I know. If you know, let me know. What are their arguments, right, for how big the peak is, beside feelings, Oh yeah, these and these other feelings, feelings, and it's nothing else, just feelings, because don't tell me about the strategic reserves. You don't know how big of an influence is. Like people, thought that Saylor was buying all these Bitcoins in the last few days. He announced it today, and look what happened to the price. We crashed, like a mini crash, but still a big correction, right? So, yeah. But if we follow this idea that there is like a decay, then, and we stick with it, because I like it, because at worst is a very, very conservative estimate, right? And today I made a post saying, look, stick with conservative estimates. They are still pretty good, because if we reach so by the way, this projection, I modify these where you get actually the real projection. Here is the projection 500 days ahead. This is what it means. So 500 days from here is going to be 184, and you can see it's already correcting. The price is already correcting. The real projection for the top is 200,000, close to that, right? Here, 206 something, 10. So that is the projection for the top. And I modify these with the latest version where it actually gives you this value. But stick with that. It seems too conservative. I say, well, come on, it's just over there. We are going to be there. If I show it not log, if I see, because the previous one was with the log, so you can go here and click the log. You can see it's not that easy to go there, right? We need to go all the way there, and we have 1 year of time to go there. So it looks more of a challenge when you use the linear scale instead of using the log, right? It looks much more difficult to reach that point. I think we go there, okay? But stick with that. And then if we get surprised and we reach 300 or even higher, then we'll be great, because this is not really fundamental part of the power law. It's just we are using the power law to measure these changes and characterize them and come up with mathematical formula. So it's a derivation. It's a secondary derivation. It's not like, I miscalculated a little bit of how strong the wind is. You cannot tell me, oh, that destroy your theory of gravity. No, but there is a theory of gravity, and in addition, I add the wind to correct the path that I'm expecting due to how gravity works, how inertia works, right? It's just an add-on. And people know it's notoriously difficult to even calculate air friction, air resistance, air drag. It's very difficult, and it's non-linear. It depends on the velocity of the object. It's very complicated. And so this is what we are trying to do. We are trying to do something complicated using the information from the power law, but it's not part of the power law theory per se. So I don't mind if we go to 300,000. Okay, great. I consider this calculation is based on this observed decay. Is this observed decay a fundamental property of Bitcoin? If it is, like if it happens that we are reach 200, then we correct. I don't want to understand what the heck is going on. Why is so regular even in that component, right? We can do that when we reach that, and they say, oh, come on, right? This is now it's going to be the fifth bubble, because if you include even the first one before the halving, this will be the fifth one. This is the fifth bubble that we follow this very precise decay. What is going on? We need to understand it, right? Right now, it's just what we have. But if we go above, great, right? It means that maybe that was due to chance, or maybe we didn't understand it, whatever. It's not fundamental, but it's conservative. So stick with that, focus on that, and everything else is great, right? It's an add-on. Okay, and this is it. This is what this algo does. If you have only this algo, my suggestion in how to use it by itself is that one thing you can do, right, is looking at what the price does. So, for example, if a price, you see the white line here is the price. If a price crosses the full model, also we are, of course, in a region that is overheated, right? So we are in the yellow, orange, red area, and we are crossing the white line. Okay, that is a time to be careful that probably we are reaching the peak. And then when it comes back and it crosses down, you could consider that your peak. So you will not be exactly here, you will be here, right? So you could use that as your indication that, the peak is confirmed, right? We cross it once, we cross it down, because this is pretty much what we observe every single time, right? You see, we cross it here, we cross it there. You will not get exactly the peak, because it's very, very difficult to get to a peak using this alone. We have other indicators, like you see this one, for example, that looks at the deviations and normalize them. This is much more precise. Like about when we reach 100, is kind of like a risk indicator. Right? When we reach 100 and we surpass it, it's probably the peak. But if you only have this one, you're a little bit limited because you don't have all the other indicators. But you can still do a pretty good job. So this could be a suggestion. You cross this once, you get an alert, right? You're waiting for a big correction, and then when it comes down, this can be like a confirmation signal that we reach the top. Okay, I'm going to look if there is any suggestion or a question. Okay, hello, professor. Have you analyzed Tau? Yeah, analyze many different coins, and nothing is like Bitcoin. But if you want to discuss other coins, we have a channel, our ghetto channel. You can come in our discourse and tell us about Tau there. Let's keep a discussion focus on Bitcoin right now. Okay. We do have a CASPA, because you know the controversy. This is a CASPA, by the way, indicator that you get, but you don't have to use it, right? Because there was the suggestion that for some time CASPA was even the cycle. Look at this. It was even predicting the cycle for some time. It was really cool. I would not have minded if it was another coin that was kind of a baby power load. It was like cool. It could have been cool, because it gave us another example that we could have studied and understood why also this one is following a power law, right? Some people thought it was a limitation of a power law. Why? I mean, if there is another one that follows the power law and we can predict stuff with it, we need to understand what is going on, right? It doesn't diminish the power law. But you see, I always gave warning, and they say, look, we have to be careful, because with Bitcoin, this thing went on for 15 years. It's a much more established system. It's possible that CASPA follows the power law, but then, we will have to see. It's a test, right? Somebody told me that this happened because I talked with the CASPA people, because there was a change in the protocol. They started to reward a lot the miners with fees. Something changed. And it's interesting, because if that is the case, See, it's very important to keep a protocol consistent and not do big changes. And this is one of the good things about Bitcoin. It's very consistent in how it operates. We didn't do anything crazy. We kept it going. This is kind of almost like a warning to keep the system going, because once we did that, the incentives and this very, very strong balance between proof of work and what is required to do the proof of work. If you start to give incentives that are not balanced with the system, you're going to bring the system out of balance. So it's really cool. It's actually could be an example to study to see what goes right with the power law and what goes wrong. So it's very cool. It's where you get it among all the other indicators. It's interesting to see. Anyway, so the next one that we have, so I'm going to turn this one off, and I'm going to turn on this one. So this one is a simplified version. We stick with one value. And by the way, you can change the value of the slope. Like let's say you do calculation of lines, like a more recent value. It doesn't calculate automatically. We could do it. We could try to do the latest value automatically. I'm always improving them. But right now, you can change by hand. But you don't have to, because this value is good enough. You have a moving average, that is this color band. You can make it longer or shorter. If I make it shorter, it will could be closer to the data, right? Last 30 days, for example. And it will color itself according to how big the deviation is from the trend, right? And now we are kind of in the yellow area, where we are close to the top. The moving average is going to become red, etc. We still have a full model, right? That is this wavy power law model. It's here. I color coded in green the regions. So when the full model is below the trend is this one. This one is the support line. This one, unfortunately, we don't have like a upper limit, right? We have a lower limit, but we don't have an upper limit. The upper limit is kind of given by the peaks of this full model. You can use things like Quantile, or now, for example, that is the next indicator that we get, that will be number 10. I just sent it for approval for TradingView and should be available. You will get it soon, like in the next few days. I will show it to you. It's a Quantile indicator, kind of similar to what Plum C did it, but it's the adaptive form of it. And you can use that to kind of establish a ceiling, a statistical ceiling, where it's very, very unlikely we go above that. But this is also what is trying to do. Like if you go above here, probably you are coming in a region that is very hot, and we are coming close to the top. Plus, you have these to tell you where we are expecting the top. Because, for example, different from Plan C, because we have our differences. This model implies that we could reach the top anywhere. So it's kind of, but to me, it's not correct. There are very precise places where the top happens. It's never precise. We never say exactly here. Think about like a region, right? Maybe that is another thing we could do. You could add like a colored region. Say, listen, it can be anywhere there, right? Like a plus or minus, let's say 2 months, right? From where we say it happens. But again, the top is about 200,000. This is the projection. Unfortunately, the reason why I don't continue here is that TradingView doesn't allow you to plot more than 500 points ahead. I don't know why. Some people told me there is a way to go around that, but I need to look at it, because it would be cool if we could project all the way, where the cycle is complete, so we know where it is, right? But you can still always try to do it like the way I do it here. I'm drawing a line, kind of it's going to go down like this. But we're going to, let me see if I can find a way of extending the cycle all the way to here. I need to learn how to do that. This one is cool because it has also liquidity levels. You go here, you click the bolt, you scroll down, and right now I turn them off, but you can turn them on. Okay, and you can see all the liquidity levels. So you get liquidity levels, and so you see where the different liquidities are in the price, both for short and longs. These are all longs. These are all shorts. So this is also cool. I don't think there is much to say more about this. It's kind of a simplified version that you can look alternatively, than what I just showed you before. And it has liquidity levels. That is cool. Okay. So let's go to the next one. This one is basically inspired by the rational root that made this. I can show you our version of it if I find it. It's basically like a clock, this clock. Okay, so it's a clock that actually is kind of cool. I didn't watch it recently. I will make a post with this clock today. So basically, it's the idea of plotting the price of Bitcoin in a circular pattern like that. This is called, it's not, like the power law. I didn't invent the power law. I applied it to Bitcoin, where this is where I get the credit. He gets the credit applying this transformation, what we call transformation in physics, to Bitcoin. It's called the power law. Sorry, it's called the polar coordinates transformation, where basically you go from linear coordinate to circular ones. And it's used often to show any cyclic behavior of your data. If you have regularities and like you have seasons or things like that, you can see the regularity. For example, with Bitcoin, you can see how you see these are the peaks. See, peak here, a peak here, a peak here. They all happen around the same region. These are all the bottoms. See, these are all the bottoms. They all happen in the same region. So this is what this chart is trying to show, is that there are regularities that seem to be very seasonal. They happen more or less around the same period, right? In a region, but around here instead of being all over the place, right? So this is what happens, is what this chart is trying to demonstrate. And our variation of this is that we added the power laws. So this red one that you see here is the regular power law, the straight line. And this one is the one that is curvy. And it doesn't look like it's curvy, but see how it looks more like an ellipse instead of being like this one is much more circular, right? In terms, it's like a form spiral. And there are these things called power law spirals. There is such a terminology. These are power law spirals. Really, Bitcoin is a power law spiral. That is crazily cool. And here, the blue line is the full model. You see how the full model kind of follows the tops, right? Every time there is a top, it follows the top. And it tries also to follow the bottom. You see bottom here, the bottom. You see how the blue line is below the red line, you see? And because it's trying to follow the bottom, it's trying to do both, right? So it's more like a egg-shaped ellipse. It's like squeeze here and here, right? And it's really cool. If you love mathematics, if you love heart and imagination, you should go crazy with something like that. This is basically, I'm showing that what rational root. Everybody's fascinated by this chart, but they don't realize why it's so fascinating, because they follow power laws. And I have some charts where I show what happens if you average more and more the price. It basically almost falls on top of a red line. You just see the red line. It's just crazy. It's almost shocking how it follows incredibly well the red line. So we took this chart that, okay, it's cool to watch when maybe, it's a little bit actionable because it tells you how close we are to the peaks, etc. But we try to make it more practical by creating this kind of oscillator. So what you're seeing here, see, relatively to the chart that I just showed you, imagine, so see also this is a little bit of innovation that we had. I think he's using like emotions. I don't care about motions for science stuff like that. He puts like emotion around it. Okay, it's interesting, but we did it in terms of clock. So this is 12, the top, 3 is the bottom, 6 is when basically it's 1 year. So every quarter here is 1 year, right? 1 year here, 1 year here, 1 year here. So when we leave the bottom, it's 1 year behind us. This is where we have these, mostly because nothing really special happens here, but basically, okay, it's 1 year from the bottom. We are going towards the bull run, usually in this region between 6 and 9 when the bull run really starts. And again, think about region, right? We didn't touch 9, but kind of, right? It's a region of 9. So the bull run started. So this is the region where the halving occurs. These are the halvings, and they are not. It's not always perfectly the same place because the blocks are not exactly 10 minutes always, right? In average, we are, but not exactly. So here it is. These are the halvings. So it's a really cool chart to look at, right? But we try to make it a little bit more practical by projecting that end of a clock to the y-axis, and so basically you're getting a sine wave. And this is what you see here. It's a sine wave that represents the clock. And you see it becomes bigger and bigger because the radius of the end, the radius of a spiral, that is the length of the end of a clock. It's like a funny clock where the end of a clock becomes longer and longer, and so that length represents the price, right? How big it becomes bigger and bigger. Now here the color coding, while the color coding before indicated the distance from the power law, here indicates time. So as we come closer to the top, the color becomes reddish. As we come close to the bottom, it becomes more green, yellow, and then orangey, right? When we go to this from bear to bull, more orange when we reach the bull area, and then the cycle repeats. So it's a way of knowing where we are relatively to the cycle, right? Here, the prices that I show, it's the end of a cycle. Basically, if it is for, it like you can think clockwise, right? In terms of clock, it's not really the real top. It usually happens a little bit before 12. So this is why I have here 46 instead of 62, right? Because the real top happened a little bit before, like 11 o'clock. This was the time at 12. So in the top region, so imagine this as a region, the bottom region, the top region, the bull market region, and this is what the price was there at that end of the region. So basically, this was January, January 22, when the cycle ended. And so it's useful to know where we are. And again, these lines here, they represent the two spirals, right? And by the way, why, if it is a sine, right, it should be negative, right? When we go around, this will be negative. So I flipped it. I take the absolute value. So it looks like bumps instead, right? So imagine this is kind of flipped. So it should be going negative, but I thought people will get confused even more. I don't know. Maybe yes, maybe no. But I kind of took the positive value. So it looks like bumps instead of looking like a sine wave. We can convert it in a sine wave if people like it, but I like it like this. The only thing sometimes people say, oh, do you mean that it reached a peak there? No, it didn't reach a peak. It's a transition point in these oscillations. The peak is here, the bottom is there. This is a transition. This is where the bull market region is. And you can see it really corresponds, right? If you go to the price, let's turn off the liquidity levels. So it's a little bit more clear. Okay. You see nothing special happened there, but it's kind of a way of saying, okay, 1 year is passed by from the bottom, I'm going towards the bull market, but see, the bull market are pretty much where we are expecting to be. The top are pretty much where we are expecting to be. It's very, very regular. And I hope this regularity continues because it gives us a framework, right? It's very helpful to know where we are in the cycle. And to me, it's amazing that it maybe is the only asset on earth that has this incredible regularity. You know, why do you want it different, right? Bitcoin has done this for years, and it's beautiful. I like it. Now, if Bitcoin decide to do something else, we will be there. We will study. We have a framework to understand that something changed. Instead of driving in the dark. That is what this is trying to do. It gives us a framework. Okay, so this is what we are using. And right now we are in this region, right? It's where we are expecting the bull. This is why I was saying, guys, the bull is going to happen in November. The bull. I'm not making it up. I'm not Nostradamus. I'm just trying to understand Bitcoin. And Bitcoin tells you. Bitcoin tells you. That is the point. Bitcoin is very open. Say, look, guys, I'm telling you where I like to have my bulls. I like it to have it here. And nobody wanted to believe me, and then everybody congratulated me. I congratulate Bitcoin, not me. It's not me that is magical. I'm just listening to Bitcoin. It's Bitcoin that is magical, right? That it follows all these very precise patterns. It's a paradise for an investor because you can do all kinds of things. You can use this information to your own advantage, and let the non-believer non-believe. It's not a question of believing; it's a question of understanding. All right, so this is what this guy does. It's our other indicator. Our next indicator is this one. So this is basically a collection of oscillators. So we can use the power law and then subtract the price, and then whatever is left are these cycles, right? It's not noise, right? If it was just a bunch of noise around the power law, it will look all scattered, and there will be not much information. There is the information is the other signal. There are two signals, right? There is the overall power law, and then the oscillations due to the cycles. And so it's cool because by subtracting the power law, we get the cycles, right? So we know where we are. Now, we did it in many different ways. So you can calculate this deviation in many different ways. This is why we have all these different oscillators. So you click on the bolt, and you get all these different choices. Now, if you choose the first one that is relative to the trend, basically you take the price, you subtract the trend, and then you divide by the trend, right? It's called a percent difference relatively to the trend in this case. If you do that and you choose that, you get something like this, okay? And the beauty of doing it in this way, of the usefulness, it's not very practical, because you see how this is so high. This was the first bubble that we ever had. And then this other one, this was like, this was in 2011. This one we had it in 13, right? This one actually happened before the halvings. This was the first one we had in the halving. You see how they became smaller and smaller and smaller, right? And this is how we can actually predict. It's not easy to see because you have to do it in a log chart. So you will have to take a log, and then you can see that this guy follow a precise pattern. You see how I can draw a straight line that connects all these peaks? See, look at this. Let me show you better. This is how we predict the next stop, by doing this. Let me zoom in. So if I do it in this way, and I use this as my peak, see how, not perfect, right? Nothing is perfect, but kind of goes through all the major peaks. You see how this is? It's pretty amazing, right? Because you will think that it's pretty good, right? Let me zoom in more. All right, like this. Not perfect, but pretty good. There is always some errors, right, in your data. You will think that it's given by FOMO, it's given by craziness. It's okay. Maybe they go down because it's more difficult to push the price when when the price varies in the order of thousands of dollars, and here it's in the, these are deviation, by the way, so it doesn't give us the price. But here we're $12,000 here, or $20,000. Here we were 60,000, right? It's more difficult to push the price here than it is here when it was like $30. But why will it do it in this very precise pattern, right? And when you have log, or you have a chart with the log, it means exponential. So this is an exponential decay. That is amazingly regular, right? Amazingly regular. So you could say, well, this exponential decay will continue, and you can basically extend the line, and this is how we know where the peak is going to be next, right? So we go there, and we usually know where it is. So it's a combination between knowing how big the deviation is and where it is. Okay, all right, so it's going to be the end of the year, right? It's going to be here. And you see, if I extend it that, I get close to 80%, something like that, 81%. You see, this is how it works, right? This is how we did it. Not just me, but some of the other influencers, analysts, whatever you want to call them, that study the power law. Some people use the difference from the bottom, but you just connect these points. You see there is this regularity, and you say, look, maybe it continues to decay like this, and we usually see the top around the end of the fourth year, the quarter number 4. And what is the deviation? The deviation is 80%, right? Here it was almost 3 times. This was 5 times. This was 10, 15 times, right? So it's going down. Here is about 80% from the trend. And we can see what the trend is here. It's about, you see how this was the high, if you ever wonder. It's about 140, something like that. This is what the trend tells us. And you say, okay, and it's supposed to be 80% from the trend. Then, okay, what is 80% from 135,000? About 200,000. This is how we get to 200,000, if you ever wonder. We do it in this way. Now you say, well, I don't believe that it will continue to follow this decay. Yeah, it's a valid concern, right? But it will not follow. That is, maybe it's due to chance. It's interesting that is there, right? It's even, look, I'm even connecting the first bubble before the halving, and it follow a very precise pattern. It's the only thing we have, because anything else will be made up, right? Everything else will only be a guess. This is kind of a guess, but at least it's based on something, right? Something mathematical. And it's conservative, because if I was going to give you a bunch of stupid FOMO and say, whoa, based on this, I'm thinking the price is going to be 500, 1 million, I'll be the first one concerned. Here, we are trying to be conservative, right? So it's okay to give you an idea based on some conservative thing, but don't use it against me if we go higher, because I'm telling you already, it's the weakest part of this analysis that we do, but it's an analysis. Look, you agree? There is something there, right? There is something reasonable, and it's reasonable to say, well, what happened if, see, it's the premise. You have to understand what the premise is. If it continues to have this exponential decay, then this where we are going to be 80% from the trend, and that it's 200,000. You see how it works? But it's at least something then better than just moving your hands, right? Because 99% of people that do this analysis, they move their hands. So anyway, it's kind of cool, in particular if you use it in the log fashion. Then in the log fashion, when you use the log fashion, actually it's pretty cool, because you have these regions, right? You see, look at this. You identify very precise regions where basically we are not in a bubble like this. We are close to the power law behavior, right? Here there was kind of a local mini bubble when we went away from the power law, and then we corrected. In general, this is kind of non-bubble, right? It's almost like there are two modes, right? There is the bubble mode, non-bubble mode. Bubble mode, no bubble mode. Here he was undecided because there was all this craziness. It's kind of cool to look. This was the craziness of the ETF, right? It got excited, it looked like a bubble, then we corrected, then it corrected. See how it's no decided, right? Because decided when it's in a real bubble, it turns red and it stays red, right? And it stays red for a long time. That is what the bubble territory looks like. And look at this. We have like a little few dots that tell us we are kind of in bubble territory. Right? Now, let's hope that it continue to stay like that, and we stay in the bubble, and everything looks okay. Like we have another bubble, right? And we reach here, we reach the top there. Maybe, maybe we go higher. But right now, this is what the data suggests, right? This is pretty cool. Now, you can use the other indicator, the other variants. For example, if you go here and you look at relative to the price, now you take price minus trend, divide by price, right? And what happened now, it looks a little bit more normalized. I don't even have to take the log to kind of see where the top, because the first version, unless you did the logs, one you had this huge big top, then the smaller one, it's difficult to tell where the top is. These are a little bit more normalized, right? It means they have similar height. And it's kind of a clue of what is going on. As the price goes up, if you correct it by the price, then there are not these huge big variation like before. What I really like, though, is this one, the K adjusted, right? This is really cool. What is this? We are basically taking away the decay. We are compensating for the decay. And now you see all the peaks are similar, very similar. And now this allows us to create a kind of a risk indicator that goes from zero. We kind of almost, these now are not deviations anymore. So in the beginning, we have deviations that are normalized, but because we are arbitrary anyway, because we are normalized, we transformed it in an index where you will go from 0 all the way to 100. And every time we go to 100 or above, we get a peak in an almost surgical way, right? Here they show both the two peaks that we had. And so you could use this for DCA, for example. You could say one game you could play. Let's say you didn't want to sell your Bitcoin, but you still want to use this information. You could say, look, as I'm climbing here, like even myself, I buy a little bit of Bitcoin every week or every month or whatever, right? Every single person on earth should do that, even if it is 5 cents of Bitcoin, whatever the minimum amount of Bitcoin you can buy on a market, you could, you should. But you could do this where you create a balanced portfolio between, I know it's trashy fiat, but it doesn't make much sense to have buying a lot of Bitcoin when you're here. Sailors can afford it. You cannot afford it, okay? You should be more clever than sailor. And so as you come close to the top, put aside this money, put it in somewhere, like even in a wallet, get some USDT. I know it's temporary. You want to keep it, you want to keep Bitcoin long term. But if you are in a region like this and you still want to continue with this habit of buying, now buy USDT instead, or convert it to USDT, because Bitcoin is going to crash. So basically, you're buying FOMO. You see, you're not buying Bitcoin there. It's not anymore Bitcoin. People say the market doesn't agree that is the right price for Bitcoin at this particular moment, right? So it's going to correct. So buy the FOMO and use that FOMO. So what I'm suggesting is, it depends on, in theory, one could go whole cash here, right? And then as it comes down, you start to buy Bitcoin. But you could do half, right? You could say, look, I'm always going to keep at least half in Bitcoin, but I'm going to, buy more USDT where I have maybe 50-50 at the top, right? At the top, I'm going to be 50-50. At the bottom, I'm going to be 100% Bitcoin. And you can do this. You can use this gradation, right? Every time you change by 10, you can even write a spreadsheet or something. I'm going to write it myself. I'm going to write a spreadsheet. You can decide how much you want to keep in your balance, what is the maximum balance that you want, 50-50. You want to go all the way, all Bitcoin here, all, not in terms of selling, in terms of buying, right? You can also do it with the selling, where you say, at most I want to sell 20%. And then you can use this to kind of gradually change the balance of your portfolio, where you will be 20% USDT here and 80%, and because you don't want to sell a lot of your Bitcoin, but you sell a little bit. And then as we go down, we rebuy back. And this will improve, it will make you Bitcoin grow over time, right? Without taking huge, big risk. I'm not telling you to do anything crazy, like some of the people that are fanatic are attacking me. I'm telling you to do something moderate, right? Or you can also do other things. You can use this to maybe for options, if you want to play with the options, because MicroStrategy is also linked to the price of Bitcoin or the ETFs. You can play with this information because it tells you it's a risk measure. What is the risk? The risk is that you are holding FOMO. So maybe you want to change your view, right? Say, yeah, one Bitcoin is one Bitcoin, but one Bitcoin here is not really one Bitcoin because there is a lot of FOMO attached to it, right? So sell some of that FOMO. When we go back, when Bitcoin is more valuable, according to what the general consensus is, that is the entire idea. This is why we have a power law, because it's consensus. We are agreeing that it needs to go up in time, right? 10 years ago, people didn't agree that Bitcoin was $100,000. They didn't, and if you were imposing that view on them, even if it was like a vision for the future, people will not have agreed. So you want to follow the general trend, right? And one day, yes, it will be $1 million, but it's not yet. We are not there yet, right? So this is the entire idea behind this. So again, they are all tools. You decide what to do with them, right? I'm not telling you how to use them, but this is cool. It's one of my favorite indicators. We have this one. So this one is called the Hearst indicator. It looks at the fractal properties of Bitcoin. Basically, it's telling us the nature of the changes in Bitcoin. We could go deeper. I can answer question if you have, but basically, this was based on an article that is called Chaos and Order in Bitcoin Market. That is what it's called. And they had this very fancy way of calculating these fractal properties. They say, it looks like power laws. They have all these fractal quantities look like power laws. They were very, very close in identifying the overall power laws that I found. They found power laws in the fractal behavior, because Bitcoin is all power laws all the way down. Even this, I was talking about today, even how the holding time of Bitcoiners is a power law. These are the fractal properties. So it's basically a bunch of power laws. So I try to recreate. It's not easy. It's really computational difficult for TradingView to calculate this thing. It's a complicated set of equations, but basically tells you in a color-coded way what is the type of regime that we are. When we are above 0.5, we are in this regime where the price tends to be trend following. And you can see here, usually this is associated when the price is going up in a very consistent way. You see, this is what happened here, where the price went in a very consistent way up. And then if a price starts to oscillate back and forth, you remember the 55 gang, we were going back and forth, back and forth, back and forth. Well, the price corrected itself, this quantity corrected itself, and we went below 0.5 during this oscillatory phase. That indicates exactly that the price will oscillate, will go back and forth, around some kind of a mean. So we were many, many months where we were in this regime, basically starting like around September, where we were just oscillating back and forth. And this is what this indicator shows, that we are in this regime. Now it's recovering from that and going towards trend following, you see? And so the fact that turn around, because it will take time, right? It's a lagging indicator, so it needs a lot of past information to do the calculations. But the fact that it's turning around, say, okay, I'm not anymore in this regime where I'm oscillating. This is called mean returning. I'm going towards the trend following. When it will cross here, this will be a very strong sign we are in a bull run. You see, every time we had a bull run, we cross the yellow line at 0.5, stay there for a long time, and it's another converging signal that changing and going down, it means a top, right? So it actually, according to this indicator, this was the strongest change. It didn't even perceive this as a second top because we were basically already going towards, we were going away through this trend following pattern. The strongest component of a trend following happened here. It's possible with this cycle we will have something similar to this, right? If you continue to go fast up, maybe we reach a deviation that is so big that it needs to have a strong correction like this. So this is why we need to monitor everything and see. So these also help us, right? Because you could have treated as like this as your top. You will have been perfectly fine. You will not have had a cycle conviction, right? That it didn't happen at the right time. But you could have made a bunch of decisions here, maybe like partially, because you say, okay, I'm missing the time component, right? So this is how you interpret this. You want an alignment. Of course, like in this bubble, everything, I wish everything was always like this one, right? Because in this case, you had everything, right? You had the indicator here that say, okay, we are in a trend following, we are changing the trend following. That means probably we're going down. We have the timing, we have the top, the indicator, everything, right? There was now a confusion about two tops. But if there is that additional complication of a second top, you can still make a decision because, okay, 4 of the 9 indicators, they all point in the same direction. So maybe I should do something, right? Maybe partially, because maybe there is a second top, and maybe the second top, it's higher, so, if you were going to sell 20%, sell 10, then if there is a second top and it happens to be even higher, you can sell the rest. So this is how you use this indicator. It's a guideline, and like I said, it's GPS. It's not like, okay, you're not doing this in a robotic way. Okay, this is also this indicator. Let me take a pause and see if there are questions. Okay, general question, I will try to answer them later. I'm just looking for any question about the indicators themselves. Okay, I don't see any, so that means probably my explanation is very good. Okay, I'm going to the liquidity. So we have this liquidity indicator. All right, so and I'm drawing it separate because, you can stack it with the other ones, but I like it to look at it in a separate way. The reason is mostly because it's a secondary indicator, right? So it helps us to, again, guide us and know where we are. In the past, it was more useful because it looks like every time we were ready for the bull market, we had something like this. This is where we had the bull markets, the previous times, we had always an excess of liquidity. So this purple line, basically, it's a model that I created where I look at the relationship between the price of Bitcoin and global liquidity. Global liquidity means all the M2, basically how much money is moving around from the bank, from the Federal Reserve, large institutions. And there is a relationship. It's not like a power law. It's a very complicated, non-linear relationship. And, it looks like a crazy curve like that if you plot it in a log chart. So you make these models that are a little bit of a stretch, because when you have something complicated like that, different from the power law, recognize, oh, it's a power law. What the heck is this, right? So you have to use this indirect method that are called polynomial expansions. You have to decide how many terms to include. It's a little bit more arbitrary, but you can still make a model that expresses a relationship between, in this case, price and global liquidity. That is basically the purple line. And the way you will use something like this is, once you do it, when you look for regularities, patterns, what pattern can we see? Like what I observed previously was, okay, just before the bull run, it kind of makes sense. There is an excess of liquidity, right? So the model, the purple line is above the white line. The white line is the close price, just the regular price. The purple line is kind of like, you can call it like a fair price given the existing liquidity. And just before the bull run, it was in the past, at least, it was higher, right? That means we have more liquidity than we can use at the moment. It makes sense, right? And then that kind of fuels the bull run. And notice what happens when we are close to the top. It's the opposite, right? We are running out of liquidity, and this is why there is a price correction. So it seemed very useful in this way, because it seemed to be the same thing over and over again. Okay, and this is the only thing different. In fact, the only exception where we had no liquidity and we went up like crazy was the bubble before the halving. But before you jump to conclusions, notice how this, we went from less than $1 to $30. So it was much easier to have just local players, like crazy Bitcoiners pushing the price up, and then it corrected strongly down. But it's more reasonable to have something like that than having this now that we're moving trillions of dollars around, right? So I will feel much better. It's one of these things where I'm not attached to it, because it doesn't belong to a power law, right? Even if it belongs to the power law, one should never be attached to these kind of things, right? Of course, I like the power law. I am biased towards it, but whatever Bitcoin data is, we learn from it, right? But this is a secondary measure that I thought it was going to be very useful. Right now, it's useful in the sense that it's telling us something. I don't know what it's telling us. I still think, and you can help me with the interpretation, guys, that liquidity matters. Right now, we have all these other players like, sailors, the ETFs that are pushing the price. Hopefully, they are front running the liquidity. And I'm just concerned that if a liquidity doesn't come in sooner or later, we will not have enough fuel to reach even 200,000, because I just did some calculation. I posted online. Even just to reach 200,000, how they have these multipliers, right? They say, for every dollar that comes in, we get a $50 change in price, right? That is actually a huge multiplier, 50. I think it's more realistic 10. The reason is because, some people don't sell, they are hardcore. Some people lost their keys. Satoshi's not moving these coins. So, it's not 1-to-1. It's one. Some people say 1 to 10. Other people say 1 to 50. It's not a real science, right? During bulls tends to be, we can measure it. Actually, we could try to measure it. During bulls seems to be closer to higher values and smaller values. But okay, let's use 50. That is pretty exaggerated. That means $112 million every single day, including vacations and holidays and weekends. And so every single day, $112 million to reach 200,000. I don't think ETF and Sailor have that kind of money for 1 year, right? Every single day for 1 year. I don't know, So I would like to see China and all the other nations in the world joining in the party and pushing this thing up. But let's keep an eye. It's a monitor. It's telling us something. It's good, right? It's good that the price can go up without having a lot of liquidity. But I would like to, for the next months, coming months, I would like to see this purple line turning around. Now there was a time when it seemed that converged, right? You see, look at this. The price was going down, the liquidity was going up. It seemed to like really cool. I say, oh, okay. I've made many videos where I say, this is great. It looks like we're going to meet somewhere. And then they went opposite directions. It's a little bit worrisome. So it's still cool to keep a look at, look at this thing, try to understand it, what it means. Now, eventually, I will try to improve it because, there are maybe better ways of showing liquidity that is more relevant to Bitcoin. We can also have something similar with the ETFs, and maybe even a seller indicator, or maybe you could be all in one, and you can, like here, for example, you see how. Let me see. It's actually here. You see, these are all the different things, including, right? Maybe we can have ETFs, so you can add ETFs and see how it looks like. We can add Sailor, we can improve it with time. Right now, this is what it tells us. All right, then let's go to the next one. So this one, it's the volatility one. And so the way to understand is, I kind of turn off the instantaneous volatility or instantaneous returns. So what are returns? Returns are a particular way of showing the dynamics of an asset. In this case, you take the price today and you divide it by the price yesterday, right? So for example, if you did 1, that means nothing changed, right? If you're above 1, it means you add a gain. So for example, if it is 1.01, like here, that means we went up by 1%. And look at this, right? Some of the recent changes in price. We had like one day where it was 4%, one day where it was 3%. For a month, we were in average, we were almost 1% a day, right? We had some bad days, some good day. In average, in the last month, we averaged 1% a day. That is completely crazy. But we had some crazy days where we had almost 5%, right? So you can go there and check, right? Okay, what was the highest value we had? Oh, look, this day we're almost 5%, right? So it's kind of cool. You can explore, and it tells you what every single day returns were. But then you can average them over different length, and you can choose these going here in your little bolt. And right now, for example, we're averaging over 90 days, right? Over 90 days. Let's say I go over 365 days. Okay. And I'm going to zoom in. Let's turn off the single days, because I show you what is the usefulness, but they're a little bit distracting, so I'm turning them off. Okay, you can do it like this. You can go choose all the colors. You can say, okay, I'm going to turn on or off like this. You see? So I choose 365 as my average of their returns. It's basically 1 year. And that is cool because it's actually a pretty good way of identifying tops and bottoms. Look at this. See, look, this is telling us there is a bottom there is a top there. See, it's actually a pretty good indicator for that. We do that also with the slope. So the slope is even more precise and is more incredible. But you can do it also with the returns. You see, like top, bottom, top, bottom. Very, very precise. Look at this. It's amazing, right? So it's another indicator that tells us how to identify bottoms and tops. Look at this. Top. Bottom. No, not perfect, but pretty good, right? Bottom. Top. All right. And And then what this table does is projecting, right? So it's taking the latest value over whatever averaging period you want, and is projecting over our next top, where we think the top is, and is also comparing with the power law. So by the power law alone, this is what I was telling you before, right? When we calculate 80% above this 130. So by the time we go around November 25, by the power law alone, that is kind of during a bull, it's the worst case scenario. We should do better than the power law, because this is when we became exponential. We leave the power law, we go exponential, then we go exponential down, and we go back to the power law, right? So the power law, it's your worst case scenario during a bull time. So this, it's 130,000. So the worst possible case, because I will be shocked that we do worse than the power law during a bull run, right? Makes no sense. So we should beat the power law. And so 130 is really your worst case scenario. Now, could it be worse than that? Yes, but okay, then what is going on, right? We will have to understand it. But right now, if everything happens as it should happen, we get $130,000 just like that. Now, that means we will break the 100,000 wall by early next year, because by March we are already 102. So just by the power law. Now, if you take the year average, that again is consistent. It tells us 235,000, right? And it's consider that we had if you go all the way to 1 year ago, right? We were close to the bottom, then we went up. So it's kind of an average. So it's a very conservative estimate of how to project it. Now, for fun, it's not very reliable, but it's going to be more reliable as we enter. We stay more on this path. But I told you we were going up almost 1% a year about day in the last 30 days. So if you take only the last 30 days, then we get $4 million, right? If we you see how that is also useful, because it's telling you, right, take a short period of time and say, how realistic is this craziness that I'm observing right now? What am I going to get? Even in March, we are already, we will have been 260,000 in March, right? It is completely crazy. It's 270,000. So I will say, as we get more data, it's going to be more reliable, right? You can take longer ranges and then make a prediction. This kind of gives you a prediction base. If you go to the last 90 days, it's becoming more realistic with 500. Right now, I think the closest, more realistic one, because think about, right? If I do it at the top, if I do this averaging at the top, the 365 will tell us what has been over this year the average value it brought me there, right? So as we come closer and closer to the top, this 365 is going to be the most realistic value. And so right now, if you accept that, we are getting this consistent value of 235,000. That seems the most realistic right now. So this is another tool. And what I draw here are, the yellow line, it's your one kind of reference point. So if you are below, means you were losing money, right? You were getting negative value, of course, right? If you're at the bottom and you look back 1 year, because in this case we are averaging over 1 year, you had a bad year, right? Because it usually takes 1 year to go down from the top. And so, of course, you had a very, very bad year, right? This will have been a rock bottom. Like here, you had a very good year because you were at the top, right? So your average returns were pretty good. And the blue line is the power law. It's the returns due to the power law. And you can see, so there are different type of diminishing return, right? There is the diminishing returns of the peaks that are going down over time, but also there is the average diminishing return. See, in the beginning, by power law alone, there was a time when we were making 1% a day, by just staying on the power law. That was crazy, right? And over time, it goes down. And notice how the average returns, the real average return, kind of oscillate. So, the power law is really a deep statistical property. It's not just like a line that we draw to the data. It's really a statistical property of the Bitcoin data. Represents kind of average returns that you get. See, when sellers say, oh, we are going to get these average returns every year, this is kind of like you can extrapolate these and calculate the yearly returns by taking, the daily returns and taking the power of 365. We could make a chart like this and also do it in yearly return because people are interested in that, right? We can trust this. This is now is giving you daily return average over 1 year, but we could do it daily returns or yearly return average over 1 year. We could do that. The power law will give you that, right? Because it's the average. You see, the bubbles are above and below that. And these lines here represent, I calculated that if we consistently went up with the same daily gain, we will have to do about 0.3% a day. This is what this line here represents. So if we stay above it, then it means that we will reach 200,000. And this is what is needed to get 500,000. But it's more like 0.66 that will give us 500,000. All right, what else do we have? So these are indicators. So I made new ones. Let me see. I made this one that is what I call the force field, the power law force field. This is also under approval. It will come soon. But basically, it has two things. It has it has. I think I didn't want this one. I wanted this one. All right. It has this overall indicator that is basically these are the average slopes, okay? And again, it's pretty amazing to tell us also in color-coded fashion where the tops are, where the bottoms are, in a very, very precise manner. See, look, it's almost surgical. Bottom, top, right? It's not amazing. Look at this. Top, bottom. Top, bottom, and so it has these are the average slopes, the value of the average slopes. So basically you take every single day and you fit like a power law over that day and you calculate what the slope is. And this what this curve shows us. It's the value of these slopes. And I normalize them to go from 0 to 100, like basically, again, some kind of risk measures, right? It's very low risk to have Bitcoin here, very high risk because it's Bitcoin plus FOMO, right? When you are close to a top. So this is what this does. It is really cool. And then here we see the slopes more dynamically. And basically what you're seeing here, these little red and green bars, right? Little airy things here, they represent the slope themselves, how steep the slopes are. And they are color-coded where if a slope is higher than the power law, is green. If it is smaller than the power law, is red. And you can see it really cool to show the dynamics, right? So when we go up, when we go down, one of the things I notice is that unfortunately, again, it would be really cool to have it over the entire history so you could see what happens when we go up, when we go down. Unfortunately, when you do fancy things like this, TradingView gives you like a 500 limit of these little lines. It's one of the things that I don't like about TradingView. I don't know why we have these limitations, but this is one of the limitations. And so we can see only the most recent action. Now, there is a way of moving it around that I'm adding, so you can actually decide, okay, let me see how it looked like over when we went up. But I'm working on that. It will be an option, right? But I notice when we have a bull run, these little green slopes, because it's not like I'm still averaging them in behavior, right? It's every single day, but average over a few days, so it's a little bit smoother. They never turn red during the bull run, and so far, even you see, look, even this with this deep, we didn't turn red. That is really interesting. This is what happened every single bull. We started to go green. That is kind of a sign that we are in a bull run. And the only time when it became red, when we reached the top, and then it started to go red. So it's a cool thing. If this applies also to this bull run, it will be a way to know that, okay, we're still in the bull run. So it's holding so far. So it's pretty cool. And I also added these what are called Monte Carlo simulations. Basically, you run many of these possibility based on the latest stats, and you can decide, I'm going to look at the last 10 days of stats or 20 days of stats and so on. It's one of the parameters. Then it projects this cloud. See, I don't like all the other TA stuff that people do, because when you look at them, they seem to be based on some calculation or some logic, but it's never really what a scientist will do. Like when scientists tested these methods, they never really work. But things like these seem to be working because it's based on real math, right? So this is, you are calculating, given the stats, recent stats, what is the most likely possible path. And farther away you go from the center, less likely it is. And so the center here, the blue line, is the most likely path. So even if we had this correction, it still thinks we are going up. And you can see like this region here is the next 10 days. So you look at the cross section here, right, of this red area and the blue line. So that line is about where it is. That line is about 98. So it kind of, I did it a few days ago. He was telling us 104. Now it's correcting for the drop, and it's still, we are not going to cross 100,000 yet, even according to this. It's a conservative thing, but eventually, in the next few days, it's a matter of days. If we continue with these stats, it doesn't happen maybe this week, but it should happen soon, right? If we continue, this is all based on continuing with the same stats or similar stats. By Christmas, we are already 116, 115, something like that, right? So, and this is kind of a range of possible, given the stats, these are the possible, best and worst scenario. So it's a cool thing to look at, during the bull run, guiding you, to what to expect next. You should not count on it 100%, but it gives you a range of possible value due to the current statistics. The other one, and this will be the last one, let me see, at least for now, these presentations are going to be longer and longer. Maybe we need to split it in two at a certain point to hold the new indicators. But let me see. I wanted to show you this one. Yeah, so this is a Quantile, and also this is going to be approved soon. So this is kind of, I don't know if you follow the work of Sina and Plan C, etc. So this is another way of looking at the data. Basically, you're looking at all the stats over the entire history. I have some reservations about these. I may also make some critical comments about that. There is a way of improving it, by the way, but I didn't do this improvement yet. But the main idea is that, this graph suggests basically, so you're looking at the entire statistics, right? And it turns out we spend a lot of time close to the bottom than on the top. But that, if you use deviation from the trend, that is one of the problems. You have to make a quantile that will have to be based on deviations that are normalized to the price to make it more fairer. And we can make a version like that later. But because really, you saw what happened, right? The peaks are much more similar when you normalize by the price. But here, so it's a matter of interpretation. It's still correct mathematically, but you have to interpret it correctly. The interpretation is, if you accept, if you make this assumption that, oh, it could be that we see the same behavior that we saw in 2013 now. That is a crazy assumption because, at that time the price was $1,000, whatever it was of a peak, 1,200, and now we're talking about a few $100,000. It's not going to be the same behavior. But in a sense, it could be the best possible case scenario because, come on, right? If we behave in that way, if we had that kind of momentum, if it was easy to get the deviation from the trend, and we had it now, that you could not get better than that, right? Because it will be already something that Bitcoin did when it was so small, right? So it in a sense, gives us a really crazy, almost impossible best case scenario. So in that sense, then it's useful, right? Probably we want to do something more realistic, that is normalize the statistics where the peaks are more similar, right? We can do that later. But right now, if we just take it in that way, then we get these crazy deviations from the trend that will be, so these deviations are more reliable because basically they are the bottom, right? Is the support line, etc. You see here, this was FTX when the price had a huge big correction. So because this is an adaptive form of what we usually do. So we are calculating it up to that point. We are not using the statistic of entire set. We are using the statistics up to that point, right? So this is why you get a little bit of wiggly lines here. But the bottom will be a reliable bottom, right? Right now, just to give you an example, that is $36,000. So it's almost impossible, in particular during the bull run, once you're so far away from that value that we go there, right? But it's better than nothing, right? It gives, because if we didn't have these, what could it be? Could it be 5,000? Could it be 0? Right? This is telling you basically, like, it's really, really almost impossible that we go below that. And this value here, because this is like, I think I use like 96% quantile, so it means 96% of the data is below there historically, even the first events, right? Not just locally, more normal statistics, but all the way from the beginning. And that, it's like 368. So it's very unlikely that we go there, right? And right now, see, this is one of my criticism. Okay, yeah, sure, right? Because it's not that we can reach these tops at any moment, right? Some like Plan C will tell you, well, this makes it time agnostic. Not really, because you're still basing these on underlying oscillation statistics. You cannot avoid it, right? You can say that because it doesn't constrain you in believing that there is a precise peak at a precise time. It gives you the stats at any point, but it's kind of useless because it's very unlikely we go there unless we are close to a top. Because your statistics anyway assume indirectly that you have this oscillation anyway. You cannot escape it. But it's a minor point. I mean, it's another way of looking at the data. It's great to look at the data in many different ways. There is nothing wrong with that, right? It's just that it's important to understand what the data means. So in this case, we could use it as worst and best possible scenario, right? And I extended here all the way to the end of the year. Of the next year. And for example, 550,000, it's that crazy case, right? That will mean to reach that value, we will need to see the type of behavior, the type of deviation that we observed when Bitcoin was $30. You see how the people that claim that we could reach $500,000, they don't know what they're talking about, because from a mathematical statistical point of view, that means we will see this type of gains, the type of deviations that were easily obtainable when Bitcoin was $30, and they don't make much sense in terms of how much capital we need, how much inflow we need, how much institution participation we need. It's crazy. If you know any math, it's very, it's not impossible, but extremely unlikely. Now you can go lower and you say, okay, what about if I, for example, which line did we reach last time, or kind of this reddish line, right? We can put some labels. It doesn't matter what it is, right? Maybe this is 80 percentile. This is 85. I think it went up every time by 10. So maybe this is 70 percentile. So the 70 percentile kind of capture these tops here. And if you don't believe in diminishing return, say, well, maybe we do what we did last time. I think it's more realistic to think we go lower. But even if we went last time to where we went last time, we were talking about 270,000, right? But we will have to do more or less what we did last time when the market cap was much smaller than now. That will give us 270,000. Our 200,000 is more like here, right? This purple one. This is where we're trying to go. But I think it's pretty realistic. I think we should go there. All right, and these two last indicators, they are not yet available, but they should be soon, because every time I make a new indicator, there is this approval process, and it takes several days. They never tell you. I wish they told us, oh, you're approved. TradingView needs to approve it. But basically, if I don't tell you anything is good, like you guys, when you don't give me any feedback or ask questions, I'm assuming everything is good. They are like that. They don't tell you anything. It means, oh, it's good. And so you have to give it enough time. So if the next few days, nothing, I don't get any negative feedback, because they let you know if there is something is wrong, then you will get these two indicators. So that will be a total of 11 indicators. Oh, you ask, but you didn't show us 11. The other ones are MicroStrategy related, and it's basically, I made a model where I observe a power law between Bitcoin and MicroStrategy. It was holding extremely well, where see this red one is the model, the blue line is the price of MicroStrategy, this kind of red here is the real price of Bitcoin. And the model held very, very well until recently. See, it was matching very well the price, and kind of told us, if the price of MicroStrategy was overvalued or undervalued. So this basically is the. Let me move this away from Bitcoin price. So if a orange one was below, meant see how well it follows the orange one. The orange one is the model, right? And the green line here is the overall power law, MicroStrategy power law, because Bitcoin is a power law, so MicroStrategy is proportional to Bitcoin, so it should be a power law. And it was for a good time until basically, if you go, of course, away from when they adopted Bitcoin, it was kind of in August 2020, it was flat, right? It was nothing. This was the other bottom here at $9, right? Something. So it was nothing, right? Would have been cool to buy. Can you imagine buying MicroStrategy here? But then they decided to buy Bitcoin. They started to get locked to the Bitcoin behavior, basically. kind of follow what Bitcoin does. And it was a reasonable model because sometimes the model was higher, sometimes the price was higher. So you could have used it to indicate areas where MicroStrategy is undervalued relatively to the model. This is overall power law. This way support for the power law model. MicroStrategy. It's just that it had a slope that was higher, right? Bitcoin is 5.7. This was like 7.1. So a super power law. It was already enhanced by itself, and the other like a little bit of enhancement, right? And that is actually, these are like things I like because I like them because they are sustainable, they are reasonable. You get a leverage, but it's a okay leverage. It doesn't go crazy. And then recently we started to see a deviation from the power law. First, it was like this deviation. Okay, it jump, but it continues kind of follow the same behavior. And now it's insane because MicroStrategy became exponential. So when you see a straight line in a when you see a straight line in a log chart like this, right? I'm taking the log. You see, I'm taking the log of a and people use all kind of wrong terminology. They say, "Oh, parabolic." There is nothing parabolic. Parabola means power law. Parabola means x squared. They use the wrong terminology. Exponential. We use the right terminology. The right terminology is exponential. If you see a straight line like this is super clear exponential. Super clear. It became exponential, and it was going crazy, and it started to leave the normal behavior, and then that exponential became even more exponential. And this is when I knew that we needed a correction because it cannot be, like this one was like, if you continue like this and you continue to behave like that, it will have MicroStrategy will be, the most valuable asset in the world more than anything else, in a very, very quick time. It's too much, right? We're going too fast. So it needed to have a correction. This is not sustainable, in my opinion, for the long term. Now it could be that during, it's a new behavior. We need to study it. We need to understand it. I'm all for MicroStrategy. I think it's an amazing thing, but I think this is more of a sign of speculation and people basically treating it almost like if it was a meme coin. You cannot stop them. They will do whatever they want, but at a certain point there will be correction, and sometimes very strong correction. I don't even think this is the strongest correction we are going to see, and we are in a bullish time, right? So just be careful, and this is what this indicator is helping us. We're going to look at it, monitor it. It's cool. It's an amazing tool we have. It's part of the ecosystem. I'm not trying to talk bad about MicroStrategy. I'm just saying these are clear signs of unsustainable behavior. And when you see these, just be careful, because at a certain point, something needs to give. All right. So this is the end of all the indicators. I'm going to see if there is any question, and then maybe we can conclude here. All right. I'm going to look at some of the questions. When do shitcoins die against Bitcoin? I mean, I think they are already dying. Like I remember in 2017, probably was maybe last cycle was the last cycle where anybody was even playing around strongly with shitcoins. Like in 2017. In 2017, you were not looking, you were not looked bad if we are mentioning other coins. I had a lot of shit coins and I lost a lot of money by holding on this shit coin. It was a stupid thing. One of the most stupid things I did. I was holding on shit coin. I made more money, did a lot of money going up because we were going faster than Bitcoin. And I even had a bot that was buying, selling shit coins. I was making like 6 times more than Bitcoin itself while Bitcoin was going up, like in a month. But then I got hurt, I got hurt badly. And it's one of the things you do to learn, right? You learn, and hopefully you can learn from me. And I stay away from shit coins. I see Doge doing something stupid. I buy a little bit with few leverage. A few days later, I sell. I make a few $100, buy some, a few $1,000, buy more Bitcoin. But you can do things like that. There is nothing wrong. But I think they are already dead. Ethereum, I'm not sure it's dead. It's dying, or maybe it's coming down from where it was supposed to be, according to people. So it's kind of the difference between Bitcoin and Ethereum is growing over time. But I will not mind Ethereum to be around, mostly because it has some function, but and some projects. But I stay away from most coins. I'm open, but right now I'm staying away. Something about quantum mechanics. Yeah, all different sciences. The most relevant science for this stuff is like complexity theory, what is called complexity theory. It's really interesting. Considering low points of BTC next cycle bottom. Okay, let's highlight this question. Considering low points of BTC next cycle bottom around 70, 80, it's definitely a good idea to reduce. Yeah, exactly. So right now, my suggestion is this, right? It's not a dogma. It's not, I'm not trying to convince anybody. I'm not trying to, hurt anybody. It's the opposite. I'm trying to help people, I want us to help each other, right? We are helping each other. We are reasoning and thinking and trying to be as logical as possible about these things. Without them, emotions are going to be there. We are going to contain them, right? And the idea is, hey, because I love you. Nice to see you. Because is one of my strongest supporters. So my idea is this, right? Until we have evidence that, and we can talk about what is the evidence we are looking for. But most of these things, when you see them. When you see them. Like same thing when the power law will be broken. We will know when we see it, because it's very difficult to know how it's going to be broken. But for sure, like with Caspa, it's evident, right? It's not following anymore this beautiful pattern it was following before. It's broken. Same thing with the power law. The cycles are not broken. They look exactly like before. Very similar behavior. And right now, there is no evidence that anything is different besides the liquidity. But if anything, is actually telling us that, maybe we don't have a super cycle. Maybe we, I'm already skeptical how we can go there without liquidity, to 200,000. How can we do it? It's possible, maybe, but 500 without any liquidity, that is actually a little bit concerning. And so, so far, I will say, go with the most conservative approach. And if we see signs that the cycles do not repeat themselves, then we will act accordingly. The fact that we have a model, the fact we have using math, and we have point of reference between before and the past, before and after, the past and the future, actually will be the one before anybody else that know that something up that is different, right? It will help us also to identify changes. So they are still useful in that sense, right? So right now, let's think and act until we have anything else that tell us the contrary, as if a cycle will be there. Because in my opinion, it's an opportunity, right? It's an opportunity because let's say this. Let's play the most extreme case. Imagine that we knew 100% that we were going down a certain point. I mean, it would be amazing, right? Because you could sell all your Bitcoin and eventually buy them at the bottom. And of course, it's not like that, right? Because when everybody will do it, we live in this gray area between knowing that it happened in the past, and probably it will also do it, because Bitcoin is so regular. It's different from, somebody told me, oh, but there are no sine waves in finance. Well, but Bitcoin is not regular finance. Bitcoin seems to like these cycles, okay? And there are sine waves. Look at I show, for example, PMI. PMI correlates with this production index that is used by the industry, right? The heavy production industry. They use this indicator that is called PMI, and you can see that the cycle corresponds exactly one-to-one to the Bitcoin cycles. They peak at the same time. Bitcoin has bottoms 1 year before. That is really interesting. Before this, but the peaks are exactly where the PMI is. So there are already micro indicators that point out to Bitcoin being very strongly synced to these cycles. So it's not something that is completely arbitrary. It's something that is there and it means something. So right now I will say, let's go and assume that there will be a cycle. It will peak in quarter 2025. I show the logic of how we calculate the decay, right? It's not arbitrary either. It's weak. I wouldn't. The first one will say it's weak because mostly because we have only 3 data points, right? And you can be misled, but when you have a little data like that. But beside that, even that component is logical, right? It seems that it makes sense when you have to move to. Remember, we are going from $2 trillion to $4 trillion. Right? We're adding $2 trillion of cap, and it's not going to be easy, So it's not like, it cannot be like when we were $30, right? It's crazy, and so it doesn't matter what people fantasize. So unless behind the meme, and we can all laugh about memes, etc., I will say let's focus on realistic goals. If we reach that goals and we go higher, then great, we can celebrate, right? But right now let's assume that everything goes like I'm describing it, because it's a realistic and conservative case, right? This is what I'm offering. You can always go to all the other influencers, all the other analysts, and having fun with them and dream, etc. But this is what I decided, because it's a choice for me that is based on my background, on what I believe this type of research is all about. Is about looking at the science, at the data, the facts, and not exciting people because you want to have more followers, or you want to make more money by selling stuff, pushing the FOMO. First of all, what I'm selling is almost nothing, it's very cheap. And second, it doesn't matter. If somebody came here and say, look, I'm going to multiply your followers by 10. If you start to say this bullshit, I will never do it. No, sincerely, I will never do it. And I will feel ashamed, I will not be able to sleep. So this is what I'm doing. And I'm doing it with you, right? We are trying to think about this thing together, Okay. So sad not to be able to understand because I'm not English speaker. Which kind of speaker you are? I'm going to do Italian stuff. It should be able. There is always in YouTube, there is this thing where you can translate. You can use the automated translator. It's not as perfect, but it's pretty good, right? So did you consider that you could use the because this person says that, and plus, what you can do in YouTube, if you go to YouTube, because this video is also on YouTube, right, on my channel. If you want, I can give you the link of my channel. So if you go to my channel, then you can always do transcript, and then you can try to put that with ChatGPT, because it should be able to translate it for you. Okay. I don't know if you're watching this from X, but let me give you the YouTube. And in fact, if you guys want to go to my YouTube and like and subscribe my videos, we have a lot of videos and a lot of interesting things there. But you could use that, right? You could use trying to translate the transcript. Okay, let's do this last question and then we can end. Brings forward indicator, 5 years band by this below. That looks like another angle to cervical. I don't know what is this. I think what he does, that is really one of the best contributions. I don't agree on him with him about using the market cap, because the market cap confuses things. It doesn't help, because the market cap is nothing else than supply times time. So you have time on the x-axis and you have time on the y-axis. And so it looks like more correlated if you do it in that way, but simply because now you're introducing time in the y-axis, so it doesn't really help, you know. Anyway, beside that, yeah, he came up with a very good idea, and the idea is this. It is really cool. Do you remember the y-axis price, right? But you could, in theory, because it's price, it basically, the power law says price is proportional to, I can write it here, right? Price, I'm writing it in the chat. Price is proportional, roughly, to time to the 6, right? This is an amazing thing, that if you look at the power law, beside, even the bubbles can be written as an equation, but it's going to be a more complicated equation, right? If you focus on the overall trend, it's this crazy thing that is like, what is going on? How the price can be just tied to the 6, right? It's so amazing. It's amazing. But so in theory, you could transform that, right, and say, well, technically, I can calculate an equivalent time for a price, right? You can transform time in price into time, right, by doing price, and you take the root, the 6th root of price, right? You can do it in this way, because basically it's like, if you have a square, you can take the square root. If you have a cube, you can take the cube root. This will be the 6th root, right? And now every price could be transformed into a time. If you are on the power law, that will be exactly the power law. But if you have a bubble, you will be a time that is ahead of time, right? Because all of a sudden you have this higher price that corresponds to future price. In a certain sense, it's like saying, if I am at the top, I'm selling to people the price, I'm selling Bitcoin at the price that will be in the future. And that could be 3 years, 4 years, 5 years, whatever it is. You see how it works? And I think like last bubble, it was like several years ahead. So basically, you're selling a little bit of Bitcoin, and almost like you had a time machine, and you are selling it with the price that it will have in the future if we stayed on the power law. At the bottom is the other way around. When you buy Bitcoin at the bottom, it's almost like you had a machine, a time machine, and you went back in time and you bought Bitcoin in the past, you see, relatively to the trend, right? So it's the price that you will have got if you bought it at the trend in the past. So it's a really cool way of thinking about price and time, right? Price and, how they say that time is money, right? Yeah, for Bitcoin, literally it is, literally it is. You can actually write an equation to say, what is equivalent time for this particular price, So it's really cool. So it's, yeah, he has that. We could do a chart like that. Because, it's common knowledge. We can transform it. And if that is a cool indicator, we could use it too. We have a suggestion channel where people suggest all kind of different indicator or different ways of looking at the data. So if you come to the Discord, and again, I gave you the link, right? I give you one more time. if you come to the Discord, that you can give it and other suggestions. I try to follow your suggestions. Now about the other things we do, and so we have this regular meeting. We have 4 meetings every week. We talk about coding sometime. How people can use different coding. One of the things I'm trying to push is actually having some kind of algorithm, because during the bubble, one good idea could be you buy some future positions, right? I made a few $1,000s in the last few days because I opened some small leverage position, like 2 times, 3 times, and when the price goes up, it becomes whatever. The price changed by 5%. Is like if you have a leverage 3, it's like you add a 15% change. And if you do it in a small amount, you need some collateral, so you're taking a risk of putting some coin in the exchange. People stole 35 coins from me in an exchange, so I know how crazy it is. But our days is not as like, it's not a wild west when I did it. So Bybit is not going to pull the rug, in the next few days. It's very unlikely. I mean, there are risks doing everything, right? So if you do it in a moderate fashion, you just take, let's say, look, I'm keeping 90%, 95% in the in cold storage. I'm going to use 5% to push it a little bit, right? You learn things. So you learn about trading, you learn about futures, you learn about options, you learn about all these things that should be, if you are a long-term investor, these are good things to learn about, and the best thing is always learning by doing. So you're doing, and you're not risking much, right? You're risking a little bit, but there is some upside, right? Where you could learn how to do these things well, and you could gain some extra cash that then you use to buy more Bitcoin, right? So there is nothing wrong with that. Somebody say Giovanni is telling people to trade, and they don't hear all the premises. And if they hear all the premises and still criticize me, okay, let them do it, right? Whatever. I'm trying to find ways for you guys, me included, because these are the things I'm doing, to do more active during these periods, or different periods in the cycle. When we reach the top, we will think together, because we are doing this together. What are some of the things that we can do? Maybe getting some options, against IBIT, some puts against the IBIT, against MicroStrategy, almost like insurance, right? If a price goes down, we're making more. If a price goes up, we're making more. We can hedge our positions, right? We do it in a clever way. And there is a range, right? Some people will do it in a more aggressive way. Other people will want to do it in a more conservative way. But that is the entire idea, right? So I'm trying to make a bot that can help us with it. I have already a bot that is very expensive, because it's very expensive. It's not expensive because you can actually make money with it, and you pay off very quickly whatever fee you pay for the bot. But I'm working with another company that is doing this, and we are testing it together, etc. I'm super happy with it. It's amazing. But I try to do something that is a little bit simpler for the average user, and then I will make it part of a package. And so it's one of the things we are developing too. Amazing entire presentation. What months you estimate peak to this run? In November of next year. But you can always, I just put the link to the YouTube channel, and so you can actually go back and look at the YouTube channel and look at the presentation. Then if you have questions, ask questions in the YouTube, and I will answer to you, okay? Or DM me, or everybody can DM me any moment. You don't disturb me. Same thing with the Discord channel. You can DM me. I will try to answer everybody and help everybody. Okay, guys, this is almost 2 hours, actually more than 2 hours. My girlfriend all the time says, Giovanni, you need to make it just 30 minutes. How can I do? I'm trying. I don't know. Okay, hopefully you like it. I will see if I can put timestamps, but hopefully this was useful to you. Okay, guys, see you soon. Thank you so much to be with me tonight. See you soon. Bye, guys. Bye, everybody.